Well, I'd start out by saying the top of mind considerations and trends has to take you back in time to come forward. And then what will happen in 2012 is going to be a function of what happened in the past and what we expect, especially over the second half relative to the first half. When I go back in time, I'm going to go back to 08, 09. Terrible time for us. Right? We clearly had not a lot of capital investment, not many relocations. Tenants couldn't make decisions for all the reasons that we all know of. That changed, in my view, beginning August or Labor Day of 2010, because as we went through the first half of 2010, some economic foundations came back into the economy. People started to make decisions, and it was almost like the gun went off on Labor Day, and people, and not only people, folks in the capital markets started to invest. Tenants started to relocate, make decisions, and that worked very well right through August of 2011. Into August of 2011, another Labor Day, the gun went off, there were no bullets. The cause for that were the budget problems in the U.S., difficulties with sovereign debt in Europe. We clamped down again. That decision-making tended to stop, or at least slow down, and we felt that in the fourth quarter. As we reach back into 2012, that fourth quarter delay, we think will continue through the first quarter, perhaps even half. But after that, we would fully expect that pent-up demand from 2008 and 2009, which could not have been satisfied over 1 year, will pick up again. When we think about trends by regions, I'd start out by thinking about the globalization of real estate, and it clearly is globalizing, and over time we would expect regions would be linked and there'd be a relationship between regions. However, in the short term, especially today, there is clearly delinkage in terms of real estate markets, and if I refer to just the office markets and start making comparisons, I'll start off in Asia. In 2011, the cities which had the highest rental growth, Beijing, Shanghai, Hong Kong, Singapore, those major cities saw robust office markets, and it's a reflection of the GDP growth in those markets, clearly. If we go to the Americas, differences, very robust markets in Sao Paulo and Rio, less robust markets in the United States, although even in the United States we had our winners. San Francisco with the tech boom has done very well. New York has done very well, despite some of the financial setback that we had at the end of 2011, because we have another series of providers. We have technology providers, healthcare providers. New York is still a magnet. If we go over to Europe, quite different. Although I'm going to now break out Europe from other parts of that continent. The winners, Moscow, very robust market, doing very well. Where is it difficult? Western Europe. Clearly the sovereign debt markets over there have caused some decline in absorption and rental growth, although even within those markets you can pick cities which have done better. London, Paris, Frankfurt. So we are clearly seeing delinkage by region, but some benefits to certain cities within regions. You know, on the investment front, we clearly are expecting more volume in total in 2012 than 2011. And of that volume, the area of the globe, the Americas, led by the United States, we do believe will have more increase than the others. But we have to put that in perspective. In 2007, by far, the Americas, led by the United States, had more volume than any other region, over $500 billion. It went down to $50 billion in 2009, the largest drop by far. So as we see an expectation of the investment volume running from $235 billion to $275 billion in 2012 for the U.S., that's a 17% increase. That's large, but it's in respect to a very large decrease in 2009. The other two regions are varied in their investment activity. For instance, in 2007, Asia had the lowest volume of all three regions. In 2009, it had the highest volume. Asia never suffered the way the U.S. and EMEA did. And therefore, the fact that we're expecting a flattish 2011 and 12 masks the point that it is still the largest expected region of all three. Europe has had its ups and downs, and it didn't have a bad year in 2011 actually, but we're expecting it's not going to do much better for 2012. So we do expect that region to be flattish in 2012. So even though there's more of a volume increase in the U.S., you have to look back in time to understand those relationships.